Bitcoin breaks $75,000 as 100 meters in longs get wiped in 1 hour. Bitcoin traded at 74,435 as of May 23, 2026, after slicing through the $75,000 level overnight. Coin Bureau and Watcher Guru both flagged the break shortly before 8 and UTC, with Coin Bureau reporting that more than $100 million in long positions were liquidated in the hour following the drop. The move pushes the largest crypto asset down 3.76% on the day and 4.95% on the week, according to CoinMarketCap data captured at 0758 UTC. It also extends a sell-off that has now spread across every major coin and pulled the crypto fear and greed index down to 32, firmly in fear territory. A level traders had been watching $75,000 is not just a round number. It sat directly beneath the multi-week range that defined Bitcoin's chop after the Dow Jones hit a record close earlier this week. We covered that divergence yesterday in the Dow V's crypto write-up, where equities were rallying on Middle East de-escalation, while crypto traded heavy. When Bitcoin failed to reclaim 77K through the Asian session, that range broke. The $100 million in hourly long liquidations cited by Coin Bureau is consistent with a forced seller cascade. Leveraged longs that had positioned for a bounce-off support got stopped out as price punched through. A drawdown of this size does not always need a fresh catalyst. With the index already in fear and open interest concentrated above spot, a level break is enough to trigger the liquidations that drive the next leg. The rest of the table is worse. Bitcoin is actually outperforming the rest of the top 5 on the day. Live snapshot values as of 0758 UTC May 23, 2026. BTC 74,435 down 3.76% on 24 hours, down 4.95% on 7 days. ETH 2921 down 4.99% on 24 hours, down 7.3% on 7 days. SOL 8194 down 5.75% on 24 hours, down 6.22% on 7 days. BNB 63644 down 3.35% on 24 hours, XRP 131, down 3.92% on 24 hours, down 7.35% on 7 days. Ether's near 8% weekly drawdown is the harshest reading among the majors. Solana is tracking it closely. Both have been weaker than Bitcoin throughout the slide, which is typical risk-off behavior inside crypto. When traders de-risk, they cut higher beta exposure first. 100 millers in 1 hour is a positioning tell. Hourly liquidation prints in the 9 figures are not extreme by Bitcoin's historical standards, but they are a useful tell. They signal that derivatives positioning was crowded on one side of the trade, and that the move through 75K was sharp enough to trigger automatic stopouts across a meaningful share of perpetual swap and futures venues. These cascades are mechanical. Once liquidation prices cluster around a level, the market maker bots that execute the liquidations push price further, which triggers the next cluster, and so on. That is why a single hour can produce 9-figure liquidation tallies during a clean range break. For context, the U.S. bank story we covered earlier this week flagged $306 billion in unrealized losses on bank balance sheets as a tape risk for risk assets. Today's break is consistent with that macro setup playing out in crypto first, since crypto trades 24/7 and reprices ahead of traditional markets. Implications for spending and treasury allocation. For users who hold crypto to spend, a 5% intraday move is the kind of event that matters mostly in 2 cases. First, if the balance was earmarked for an upcoming purchase, the dollar value of that purchase just shrank. Second, if the spend route runs through a custodial card that liquidates at the point of sale, the conversion happens at the worst possible price. This is one reason stablecoin-funded cards keep gaining share. USDC or USDT funding insulates day-to-day spending from headline drawdowns like this one. Cardholders who fund from volatile assets are paying the spread plus the price risk every time the market dumps midweek. Treasury allocators face a different question. Trump Media's 2,650 BTC deposit at Crypto.com earlier in May was struck at higher prices. Public companies that bought in Q1 and Q2 are now underwater on those positions, which will surface in Q2 reporting if prices stay here. Next reference points on the chart, the next reference points sit lower. Bitcoin held a multi-month base between $72,000 and $74,000 during the spring chop, and a clean loss of 74Ks would invite a retest of those lows. On the upside, Reclaiming $500 would put the 75K break in the bear trap bucket rather than the trend break bucket. Fear and greed at 32 is not yet capitulation. The index has touched the teens during prior bottoms. So the read here is that the tape is stressed but not washed out.